Good morning, ladies and gentlemen, from wherever you're joining us. It is currently 11 past 2 in the morning, and I can't sleep. This will probably be a night in the life of an obsessed trader. Kidding, ladies and gentlemen. For those who know, I'm still going through some medical treatment. I'm sick up here, not crazy. That's what I'm gonna say. So a year on, yesterday, so I had gone to hospital for my regular checkups, and before I left, I sent a gold setup to the group, a sell on gold. And when I came back, because I didn't have access to my charts while in hospital, when I came back, I found that this particular setup had failed, or it didn't validate the kind of analysis that we had. So now this is something that is not uncommon in the market. If you ask any real profitable trader, they will tell you that we don't make money all the time, or just because we try to trade like the banks, it doesn't mean our setups get validated all the time. So without wasting a lot of time, ladies and gentlemen, I'd like us to jump onto the charts and see if we can extract some key insights. Right.
Welcome to the sponsor of this video, Top FX. Now, Top FX is a global award-winning broker that has been around since the year 2010. Top FX prides itself in offering multiple trading assets over multiple trading platforms, that is on your CTrader and MetaTrader. Now we also have expert analysis from our top traders on a daily basis. We also offer various accounts that you can choose from, with spreads starting from 0 pips up to 0.5 pips and leverage of up to 1:1,000. Now, if you're ready to start trading with the top and the best broker currently, click that link in the description button or click start trading and register your account now. So, ladies and gentlemen, let us get onto the chart and see the reasons that prompted me to look for selling opportunities on this market. So first things first, I identified my last week high and last week low, and within that range, because this helps me look at one particular area so that I'm not disturbed by historic price action, so to speak. Right. So within this range, I saw that the market was trending to the downside. I think even a grade 0 kid can see that. So we had this lower high, we had that lower low, and that lower high. So yes, lower high, yes, a lower low here. So this, I can't say it's a lower high. Why? Because we didn't break this most recent lower low. So with that said, somewhere here after this consolidation, I was anticipating the market to go and retest last week's low, of which it did. But before it can go to those lows, it took me out. So that's a 4-hour time frame. Let's look at a 15 minutes time frame. Basically zooming into the charts to see what prompted me to look for an entry. By the way, I did send this to the group. As you can see, there it is. And the message that I had sent with this was, please look for an entry at the break of 1983.50, right? Which is somewhere around, let me see, somewhere around here. Yeah, somewhere around here. So which was our last lower high. So wait, let me do this. Hope you can see this clearly, right? So we had that consolidation, a push to the downside that broke the lows. And one of the trades that I missed is this one, but I waited for a break of structure here. After this break of structure, I realized that we had some imbalance here, which I anticipated the market to fill in this imbalance and then get to the order block above that, react to the order block. I wasn't going to take the aggressive entry, but I wanted to wait for a break of the last lower high or change of character. I think probably that's going to be a bit clearer if we step to a 5-minute time frame, right? So we did have the reaction, We had two reactions here. I was most concerned about this one, this bearish candlestick. But like I said, I didn't take the aggressive entry. So I wanted the market to push below 1983.50 and then move back to the order block. That would have caused the change of character. And then that's when I was going to take the trade. It looked like a nice setup, 8.2 hour trade. But yeah, it didn't get to target profit. It just pushed to the upside. Now, let's look at the key insights or the key lessons that we can draw from this. I hope you can see my presentation, right? So at trade review, yeah, on a failed setup on gold, what are the lessons that we can extract or the insights that we can get from this trading experience? Is that number one, you will lose some trades, right? And you have to make peace with that. Trading involves incurring a lot of losses because we're in the speculating game on the CFDs. It doesn't mean we have all the information. We are not in control. My mentor normally says you cannot be in all the boardrooms where the big decisions are being made. So the least you can do is manage your risk. And the only way to see if your edge work in the market, it's trying it out. You can't be fearful, right? So what also helps there is knowing the statistics of your strategy. Like my strategy with my 1:5 risk reward ratio, I only need to win 20% of the time. For example, if we have 10 trades, I only need to win 2 to make money. Sounds a bit counterintuitive, but someday I'm going to do the math for you. It's going to make sense, right? So once you know the statistics of your trading strategy and you make peace with the fact that you're going to incur losses, what's going to happen is that you're going to execute trades without fear. As I've had, like I just executed and went to a hospital, or you waited for a checklist, which is lesson number 2, which is very important. It's very important to have a checklist, know what you're looking for or what prompts you to make an entry in the market. As I've said in this particular example, that we were waiting for the market to break below 1983.50, of which the market didn't do that. So I didn't take the trade. I'm hoping a lot of people in the group didn't take the trade because it didn't validate or it didn't tick the boxes from our checklist, right? So having a checklist is very important because it helps you minimize the losses in the market, right? Lesson number 3 is risk management. Now, I cannot stress this enough. I've made a lot of mistakes in this industry. For those that know how long I've been trading for the past 7 years. I'll tell you the truth. The first 4 or 5 years wasn't making any money. Um, Probably, I would say I'll be very lucky if I did make about 10 withdrawals within that time. And remember, I'm a swing trader. I'm not the one to make withdrawals every month. But imagine making less than 10 withdrawals in 5 years, right? It's crazy, but I didn't give up, stuck with it. I'm still here. Probably I'm still going to be here in the next 30 years in the market, Lord willingly, alhamdulillah. So why is risk management very important? You need to live to fight another day. Stay in the game. The only way to stay in the game is to limit your risk, right? Which brings me to limiting your potential risk and always having your stop loss on. That is very, very important because your stop loss is your protective measures. A stop loss is the tool that's built into the market to your advantage to make sure that whenever the market doesn't validate your particular trade or whenever you're wrong, you incur a much smaller loss compared to losing your whole account. Because if you lose your whole account, you're out of the game. It's like a knockout. You can't trade anymore. So it's very important to stay in the game. It's very important to always have some money to test and try new strategies or to test particular setups or to try a particular opportunity in the market and see if it makes you money. yeah, I can go on and on about this, but that's what I really wanted to share with you, ladies and gentlemen, today. I hope this video was very insightful for you. And if you do have any comments on this particular lesson, please drop me a comment in the description. And if you like the video, give me that thumbs up, share it with friends and family. And yeah, you can also let me know what else you want me to talk about in the industry. My thing is, I don't want you guys to go through the troubled waters that I went through, because for the better part of my trading career, I was self-taught. It was later on in my trading where I met mentors who were um, in the institutional side of trading, who've been trading for 20 plus years, who were able to share with me the tips that are going to ensure that come 2035, I'm still in the game, still killing it. Probably I'll be with some of you guys. So yeah, ladies and gentlemen, thank you so much. Cheers.